Good evening and welcome to State of Business. You're with me, Madhusha Tavapalakumar. Let's take a look at tonight's headlines first. An expert says EU GSP Plus will revive foreign direct investments in Sri Lanka. And Governor says multiple reasons affect stability of rupee. Now the story is in detail. Chief Executive Officer of Shippers Academy Colombo, Rohan Masakorala says renewal of GSP Plus to the European Union will revive the local export sector. Sri Lanka is expected to get the EU GSP Plus trade concessions most probably later this month.
We have come to the last stages of getting back the GSP Plus for the country, which is a market entry position for our exports with zero duty. These items could go up to 6,000 plus HS codes or export items in different value addition. But at the moment, Sri Lanka has a small segment of exports led by tea, rubber, coconut and a little bit of other things, plus the main export of apparel products. So the industry actually lost a lot during the period it was suspended, because we could not compete with some of the developing countries like Bangladesh and Vietnam, who were anyway having zero duty access to the European market due to those countries being least developed countries, while Sri Lanka being a middle income country. Now the issue is that we, as competing country for some other products, especially apparel, even fisheries and other fruit and vegetables, certain rubber products, we lost competitiveness in the European market, where 500 million people are having great purchasing power, as our costs, duty costs for our products originating from Sri Lanka increased to our buyers in Europe.
He also said now the challenge for local exporters is to win back the buyers of Sri Lankan products who had shifted to other markets like Bangladesh and Vietnam. Meanwhile, recently, the Deputy Minister Dr. Harshadi Silva said the authorities are yet to calculate that as to how much Sri Lanka had lost due to suspension of GSP Plus in 2010.
If you put those numbers into perspective, on the apparel sector alone, probably we would have had an opportunity cost of about US $300 million per annum to expand our business activities. So it was a struggle for our exporters to retain European buyers. Now that the new government has almost got the GSP Plus back, which we feel that at the end of this month or earlier we should have it, our exporters have now got to talk to buyers and get them back to our market, give them the concessions that they need in terms of the price flexibility that they would automatically get from their end, as duty prices when goods received in those countries become zero out of Sri Lanka. We back again become more competitive to sell more volume.
Speaking further, Masakorala said the renewal of the GSP Plus will also improve the country's overall foreign direct investments and the expansion of employment opportunities for local youths.
This will open new avenues to foreign direct investment as well. A lot of people ask how the workers will benefit out of it. Indeed, when you are in a competitive market and our competitors like Vietnam, Bangladesh can supply the same product at much cheaper. Indeed, our workers were threatened because of this position, and some of the industries had to move out of Sri Lanka to survive. So obviously, this gives stability that the existing workforce will get some kind of assurance that we have a market in Europe to compete. And secondly, if our buyers start sourcing more from Sri Lanka, we have the ability to expand and employ new people. At the same time, if business volumes grow, businesses overall grow, companies will find it easier to support the industry and its workers in a better way for better prosperity. So it's a window of great opportunity, but it's a short window if you look at it in a greater terms, a 5-year term, and then we have to migrate into a new set of exports and go into further value addition to be an export oriented nation.
Let's take a look at more news after this break. Welcome back. Immediate past chairman of Colombo Stock Exchange Vajra Kulatilaka says foreign investors are showing interest these days to invest with Colombo Stock Exchange. He disclosed around 15 billion rupees of net income came into the country through foreign buying up to March this year.
There's a lot of improvements happening. One is the indices have grown this year. More importantly, foreign investments have come in. By end of March, it was 15 billion rupees worth of net income to the country has come in through foreign exchange. So those are very important things, and it shows that there are foreigners who like to come to Sri Lanka. Overall, I think the indicators are quite positive in the Colombo Stock Exchange this year.
The overall foreign investor activity has recorded a rise in 2017 with a net foreign inflow of 16.5 billion rupees. The data shows that the foreign investor contribution to total turnover in 2017 so far stand at 50.1%, another improvement in comparison with 2016 figure of 42%. Kulatilaka also noted that CSE needs to increase its depth, and it could be done by listing of more and more attractive stocks.
More and more IPOs should come in, then only the market will have a depth. Second one is we have to have investors coming in. For that we are working marketing. One side you have to have Sri Lankan investors who come in, other side both institutional and retail. On the other side we want foreign investors to come in, more foreign investments. So we are working on that also. There's a third one is on risk management and IT side we are working on to improve, because stock exchange is a very IT related business. So we have to keep on improving ourselves to bring it to world standards. So we are working on that also.
The central bank says multiple reasons are contributing for the devaluation of the rupee against the US dollar. The Governor Dr. Indrajit Kumaraswamy said the rupee depreciated against all major currencies except the pound sterling in 2016.
The depreciation pressure on the rupee was a result of increased imports, continued foreign debt service payments, and outflows on account of reversal of foreign investments from the government securities market amidst monetary policy normalization in the USA.
A couple of things happened. Of course, the dollar got very strong, and our exchange rate today is being managed more flexibly than it was for significant part of last year. Part of it is a lag in adjustment. Part of it is, I think, factors beyond our control in terms of what happened to the dollar in particular.
One other factor is that one-off increase in domestic inflation as a result of the drought and the VAT. So when it went up to 8% from about 5-6%, that 2-3% high inflation would factor into a real effective exchange rate. Plus the US dollar strengthened versus sterling and other currencies. EU, after Brexit, sterling depreciated a lot compared to a lot of other currencies. That's also one of the reasons.
The central bank supplied foreign currency liquidity to the market heavily in the first 4 months of the 2016 and to a lesser extent thereafter, resulting in a net supply of US dollars 768 million during the year. This intervention was primarily to dampen the pressure on the exchange rate arising from foreign outflows from the government securities market.
I think the policy we are seeking to pursue is to gradually adjust the nominal interest rate to get the real effective exchange rate index close to 100, and then subsequently to manage the nominal exchange rate to keep the real effective exchange rate at 100. So we're now at the moment we have to adjust. There's a backlog we need to adjust for, which we want to do very gradually. As you know, given the high import component in our basic consumption bundle, this is something that is politically sensitive and we need to manage it. But the eventual objective is to have a competitive exchange rate and to maintain the real value of the currency.
Thank you for joining with us. We'll meet you tomorrow at the same time. Until then, take care. Good night.